Crypto market June 9th, 2025. A new era unfolds. In a world that's shifting faster than most can follow, where economic storms and political shocks reshape reality in real time, a new asset class quietly grows roots deeper than ever before. Today is June 9th, 2025, and the crypto market, once dismissed as a speculative frenzy, is now a battleground for institutions, a hedge for nations, and for many, a beacon of sovereignty in an uncertain world. Macro landscape. As we speak, Bitcoin is holding ground at around $107,000 after surviving a sharp pullback to $100,000 earlier this week. That pullback wasn't random. It followed political sparks between Donald Trump and Elon Musk, which rippled across risk markets and liquidated nearly $1 billion in leveraged crypto positions. Yet, just as quickly as it dropped, Bitcoin bounced. Why? Because institutional hands are no longer on the sidelines. In May alone, $7.05 billion in capital flowed into crypto investment funds, marking the highest monthly inflow since 2023. These aren't retail speculators. These are hedge funds, pension managers, sovereign vehicles. They aren't betting on hype. They're positioning for a future. Ethereum's quiet strength. Meanwhile, Ethereum trades around $2,530, maintaining a strong technical posture above $2,500. It may not be exploding like Bitcoin, but its strength lies in consistency. 15 consecutive days of inflows into Ethereum ETFs tell a bigger story. That institutional interest isn't just in Bitcoin anymore. It's in programmable infrastructure. It's in smart contracts. It's in the systems that might someday run global finance, healthcare, even governance. Market pulse. The global crypto market cap now stands above $3.35 trillion, down slightly from last week's highs, but well within an uptrend. Altcoins like Solana, SOL, hover around $150, with meme coins like HMSTR and Pump.Fun on Solana drawing attention. Though many analysts warn this mini-mania may be short-lived. Volatility is returning, yes, but so is resilience. Institutions and ETFs. This past month, the Circle IPO launched successfully, raising billions and further validating USDC as a regulated, transparent stablecoin. MicroStrategy continues buying Bitcoin using stock issuance, while Japan's Metaplanet executes an ambitious plan to acquire 210,000 BTC over the next 2 years. That's 1% of Bitcoin's total supply, targeted by one company. Governments are watching. The United States now reportedly holds over 200,000 BTC in its strategic Bitcoin reserve, a controversial but calculated move designed to hedge against fiat degradation and economic warfare. Crypto is no longer just digital assets. It's digital defense, regulation, and legal momentum. On the policy front, the Genius Act in the US is gaining traction, aiming to regulate stablecoins and integrate them into national finance infrastructure. Analysts say this could bring over $2 trillion into stablecoins backed by US treasuries over the next few years. In the UK, the FCA is considering lifting its ban on crypto-linked exchange-traded notes ETNs, opening the gates for broader European access. Clarity is coming, and with it, deeper capital flows. A market waiting on data. All eyes now turn to this week's US CPI report, scheduled for release on Wednesday, June 12th. If inflation shows signs of easing, the Fed may pivot sooner than expected, reigniting growth narratives and pushing crypto higher. If inflation remains sticky, we could see a short-term sell-off in risk assets, including crypto. But here's the thing. Long-term narratives remain unchanged. Bitcoin is being accumulated, Ethereum is being adopted, and stablecoin infrastructure is becoming essential. Sentiment, strategy, and psychology. Investor sentiment today is mixed. On one hand, short-term traders feel anxiety around CPI and geopolitical tension. On the other hand, long-term holders, what we call the diamond hands, are showing stronger conviction than ever before. Whales are accumulating, ETFs are buying dips, retail is re-entering cautiously. But builders, they never left. Looking ahead. So where do we go from here? If CPI prints lower, Bitcoin could push toward $114,000 to $120,000 in the coming weeks. Ethereum could revisit $2,800 or even $3,000, especially if ETF momentum continues. But even if prices pull back, ask yourself this: are you betting on today's candle, or are you building for tomorrow's world? Because this market, this industry, is bigger than a weekly chart. Final thoughts. The signs are all around us. Nations holding Bitcoin, institutions buying dips, regulations forming guardrails, not walls, developers shipping code, and everyday people waking up to the power of financial self-sovereignty. This isn't the end of the story, it's the end of the beginning. So whether you're stacking sats, coding smart contracts, or just learning what it all means, know this: you are early, you are part of a movement, and the future doesn't belong to the fearful, it belongs to the informed. Subscribe to stay ahead. Comment your Bitcoin target for June. And remember, stay sharp, stay sovereign, stay in the game. This is Crypto Mindset. Would you like me to convert this into a full video structure with timestamps, music suggestions, and B-roll ideas next?